Good morning and welcome to this weekly market update from AGM Markets. Today is the 17th of March 2014. What we'll do today is go through some technical analysis on Euro dollar, cable dollar, Swiss, Aussie and gold. We're not making any trade calls recommendations in this video. Trade at your own risk. If you could please read our full disclaimer on our website, which is www.agmmarkets.com. For any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average. The gold is 100 simple, and the red is a 50, purple 100, and gold 200. Okay, then let's have a little look. First of all, let's have a look at the forex calendar for the week. As we do these videos on a Monday, we might as well give some sort of outlook and just have a look at what sort of news is coming out this week. So in terms of it's just focused on the sort of high impact stuff. So that's the one labelled in red. I've just gone on Forex Factory because I always just have it up. So there's no sort of high impact stuff out today, but there is a lot of mid-tier data out. So you've got the Eurozone CPI numbers out at 10 AM. This is UK time as well, so that's forecast at 0.8%. Previous was that as well. Core CPI forecast at 1.0%. The previous was 0.8. And then you've got some mid-tier sort of US data. So you've got the tick, long-term purchases, Empire State Manufacturing, etc., etc. Tuesday there's quite some big news out. February trades Aussie. You've got some overnight monetary policy meeting minutes. So that should be quite volatile for Aussie. And then at 10 AM UK time, you've got the German ZEW economic sentiment. That's always an interesting one to look out for. So that's forecasted a drop from the previous, which was 55.7. This is forecast to come out at 52.8. At 12:30, you've got some Canadian data. It's got manufacturing sales, you've got US building permits, and US CPI as well. So the US CPI numbers for the core and the normal are expected to stay the same from the previous at 0.1% there. And then you got the Bank of Canada governor speaking as well at 3:55. Then you got the UK Bank of England governor Mark Carney speaking at 5:45 PM. Wednesday is quite a bit of data out. So you got if anyone trades the yen overnight at 5 AM, you got the Bank of Japan governor Kuroda speaking. At 9:30, you got quite a bit of UK data coming out. So you got the claimant count. Change numbers. You got the MPC asset purchase facility votes. You got the MPC official bank rate votes as well, and you got the unemployment rate out as well. So that should be really volatile for the pound at 9:30. And at 12:30, you got the annual budget release. That's very, very important. Keep an eye on that. That'll be extremely volatile for cable. And then at 5:45 PM, we've got some Swiss data, but the Swiss National Bank Chairman Jordan speaking at 5:45 PM. And then at 6 PM, you've got the US, the FOMC economic projections and the FOMC statement, as well as obviously the federal funds rate, but that'll probably stay the same. That's why it's put in as mid-tier there. And then what follows that is the FOMC press conference. So a lot of stuff coming out on that Wednesday. That'll be a really interesting day, very volatile day. You should get some big moves in the majors there for sure. And then, well, of course, overnight you got if anyone trades Kiwi, New Zealand dollar. You got the GDP, the GDP quarter-on-quarter numbers. You expected a drop down from the previous, which was 1.4%, to it's forecast at 1.0%. On Thursday, early morning on Thursday at 7:15, you get for anyone who trades the yen, you got the Bank of Japan Governor Kuroda speaking again. And at 8:30, you got the Swiss, you got the LIBOR rate, which is expected to stay the same. You got the Swiss National Bank monetary policy assessment as well at the same time. And then at 12:30, got the weekly jobless claims out for the US, forecast 327,000 from the previous 315, so we're expecting an increase in the unemployment claims there, which is quite interesting to see. And at 2 PM, you have existing home sales, which is expected to be an increase actually from the previous 4.62 million. Expected to increase to 4.65. And then you got the Philly Fed Manufacturing Index, which expected a much better number from the previous, which was poor, minus 6.3, and we're expected to be a positive 4.2. And then to round off the week, the main sort of headline data is from Canada, which is at 12:30. You got the CPI numbers, so normal CPI expecting an increase 0.6%, and the core expected to be an increase from 0.2 to 0.5%. And then you got the retail sales numbers as well. Interestingly, the retail sales was a really bad number last month. We're expecting a much better positive number this month. So a lot of data coming out this week, so it should be a really interesting week in terms of the market moves. Should get some big moves out there. Okay, let's have a flick through the charts now. So yes, first of all, let's have a look at this euro-dollar chart. So this is the weekly chart. In terms of the setups we've been looking at on the weekly, it's been this fib here. We spoke about this. We got a close above this 61.8 last week, and we came back down, tested it. You can see the candle had a spike and tested it. I'll just zoom in actually quickly so it's a bit clearer. So last week's candle, well, 2 weeks ago we had a close above. So last week's candle came back down. You can see the previous resistance of the 61.8 now acted as new support. So we just got a standard sort of bullish candle really, but we have got a bit of upper wick on that. So I wouldn't be surprised to see a slight retracement. Well, it already has sort of started to retrace today, but I'd expect it to keep on grinding higher. To be honest, in those bulls will want to see it come up and test these 149s, but of course we're miles away from that at the minute. But in terms of this weekly, the next sort of resistance, a key sort of resistance, I'd say will sort of be these 142s, which coincides with this spike here, and also coincides with the 2010 highs. Around here, you can see where I'm hovering over my cursor, so it's good. Interesting to keep an eye out on that 142s. Of course, we're still a long way away from that, but in terms of the weekly perspective, I'd say the buyers, long-term buyers, will want to see a grind up definitely towards that 142 level. Yeah, I mean, so in terms of a weekly outlook, purely based on the weekly chart, I'd say there's maybe a slight retrace today, and then I'd expect it to grind higher, to be honest with you, and perhaps even take out that weekly high. But it could easily stall, and if it does stall, the smaller fib is definitely from the year low to the year high, which we'll have a look at on this daily chart. So yeah, you can see that. So from that recent swing low, which is the 2014 low, and that low stands at 1.3477 to the high up here at 1.3966. This is the key fib move that I'm keeping an eye out for on this daily chart. And it's interesting to see because we spoke about it last week. I think the 50% coincides with previous support and previous resistance as well. So you can see previous resistance turned into new support around here. You can see the moving averages will come up toward, if it does retrace down here, the moving averages will be around this sort of 50% level as well. So you could get a nice bit of confluence. If we flip it down to the shorter term charts, in terms of this 4 hours has been great for fibs. We've spoken about these numerous times. You had that one there, acted really well, and then if you extend that high, you looked at the that new fib there that bounced off the 61.8, and then if you extend it higher, so just in terms of just these smaller dips, they've all been playing off the fibs really nicely. So that one's off the 61.8. Then the next one I'll be keeping an eye out for is this one here. So from the swing low of where we bounced off of that 61.8, I'd be keeping an eye out on this one here. But it's not the most pure of fibs. I prefer the ones where they're just a pure fib. I'd say is this one here, this previous one, because it's just a pure uptrend, and then a nice, fairly standard retrace, and then a pop up. And you can see it was a really pure move towards the upside as well, and that's probably why it's such a pure move to the upside, is because it was a nice fib move in terms of the way it went up and then came back down. But this one you can see it's chopping around a bit, so you could easily see it come back down to 50%, then do a small reverse, small pop up, and then break back down, and then test this this bigger sort of fib. So I would not be surprised to see that happen at all. But definitely keep that on there and see how it reacts, because you can see we did have some previous support at this 50%, so there is nothing stopping it come back down to this 50%, and then rotating higher, but I'd say it's a lower odds play to the previous few dips. And yeah, if you flip it to the 1 hour, it's the same thing I'm looking at really. Definitely the same fib move. I won't be looking at any others. Although you can see last week we had this was a fairly nice move. Although it didn't quite react to the fibs. I think it was off a round number. So yeah, I think, what was it off of? I can't even remember now. Yeah, there wasn't even off 139.50s either. You can see we did get a 1 hour close below, and then we got a sort of fake out close above, and then it's sort of just dribbling down now. But no, nothing majorly of interest. I thought that was off a fib last week, but no, it wasn't. So yeah, that's pretty much it in terms of euro. That's the only euro I'm really focused on. I mean, some people will be looking at this smaller move from here to here. And there's nothing technically wrong with that, but I don't like the way the previous candle closed, to be honest with you. But I mean, if we do get a 1 hour bullish engulfing here, if it engulfs this previous candle, then there's nothing stopping it ripping higher. But I prefer the more obvious moves, to be honest with you. And this one is definitely one that I'm keeping an eye out for. Okay, let's have a look at cable on the weekly. I've left this up from the last few weeks, really, the same move. And it still hasn't come back down here, but the daily's been really interesting, especially the 4 hour as well. As I've left these 50 pip increments up, because they've been acting as really nice support and resistance. We spoke about last week, these 166s acted as decent previous support, was also previous resistance around here as well, and you can see we're starting to bounce off of it, and I would not be surprised to see it rotate higher for the rest of the week and get up and definitely test these 167.50s. I'd have thought. If we flip it to the 4 hour, it's still the same move. But you can see we also got a nice bounce off of the 200 SMA as well. So yeah, that's acted really nice. But no, these 50 pip increments have been acting really well over the last sort of few weeks, really well, pretty much since the start of February. So you got pretty much a whole month. It's just been sort of chopping inside of these levels. And yeah, I keep my chart exactly the same, to be honest. I wouldn't really be looking at anything else apart from just keep an eye out for nice sort of reversals off of these levels. But you can see the daily, it's a bit clearer there to see. The 4 hours been a little bit been trickier to play. But you can see there's a lovely daily hammer there that closed on either Thursday or Friday, I think. And yeah, that just indicates to me that we're going to grind higher, but it does need to get a daily candle close above, because it could easily act as resistance here and then come back down and keep on chopping in between these sort of 166s and 166.50s. But I'd expect to pop up and even potentially a break off this 0% line this week. I would not be surprised to see that at all. Let's look at dollar Swiss. Nothing has changed at all. It's still in sort of grind lower mode, and I think it's going to keep on grinding lower towards this big 50% here, which is at 1.0519. So still 200 odd pips away from that, but it does look like it's gonna come back down. And then the other level I'm keeping out for are the 0.86s, is because that is where we bounced off of previously. You can see, actually I can't see if I zoom out. Yes, this area here, you can see I'm hovering over the cursor. This was a big level in 2011 where we came back down, tested it, weekly close above, and then we rotated higher and made new highs in 2011. So keep an eye out for that. But that's where it looks like it's going to come down to on this weekly chart. And then similar to euro, so on euro we're looking at a fib move from the weekly low to the low of the year to the high of the year on the weekly chart, and a similar thing on dollar Swiss. I'm looking at the high of the year to the lows. If we then flip that down to the sort of daily chart or even 4 hour, you can see it much clearer there. So actually let's just start with the daily first. So daily, that's the fib move there, and also similar to euro, you've got the 50 day moving average and the 100-day moving average coinciding with that, with this sort of 50% and the 61.8% range as well. So I'm personally looking for a retracement up to there. You can also see it act as this 50% acts as nice previous resistance and previous support as well. So it should be a key level. Let's say we have bottomed out here, nothing stopping it coming down, of course, but if we have bottomed down here, then this should be a really nice move up. So that's the focus on the daily chart. And in terms of the 4 hour, so let's just delete that fib now. In terms of the 4 hour, I'd definitely be keeping an eye out for these the 0 spot 87. It's a key support. It was a nice support last week. We had a nice 4 hour gravestone doji candle there. Off of this 0 spot 87 pretty much to the pip, and a nice reversal and pop up there, sort of nice 50-60 pip move. So definitely keep that level on your charts. And yeah, I think it's just going to keep on grinding higher. I mean, a lot of people will be looking at this fib here and I thought as the sort of the previous obvious swing high. The 50% comes in at the 0 spot 87 59s. But I wouldn't be comfortable selling at that level, to be honest. Well, it'd be interesting. I'd keep an eye on the price actually. If we get a nice reversal off of that, then it could easily come back down. But I'd rather buy the dips, to be honest with you, because I think it is due some sort of retracement towards, because it has been selling off all year. I would not be surprised to see some sort of retracement towards. I mean, it likes to come towards the moving averages, and you've got the 50-day moving average there. Don't forget, so I wouldn't be surprised to see it rotate higher this week into that 50-day moving average. But no, it should be interesting to see for sure. Aussie on the weekly, I've left this same chart up from last week, because it's pretty much the same on the daily as well. This is definitely the key fib I'm keeping an eye out for. This 50% coincides with the 0 spot 92 handle as well. And yeah, it looks like it's just in sort of grind higher mode really. I mean, last week's candle, nice lower wick on that. Yes, it's a red body, but the lower wick indicates that the buyers are definitely interested in grinding this higher towards the 50% and this 50-week moving average. And if we flip it to the daily chart, you can see it's just in grind higher mode. It had a nice bounce off the 50-day moving average here, and it looks like it's going to come up and test towards this 200-day moving average as well. And if you flip it to the 4 hour, the 4 hour has been quite choppy, but there has been some interesting levels in terms of just the sort of round numbers. You've got the 0 spot 90 handle. That was a lovely support last week. You can see there are two clear bounces off of that level, and it's just rotating towards the upside. The key resistance to keep an eye out for definitely is 0 spot 91. If you're looking at sort of short-term selling opportunities, we had a nice one there last week. You can see I've just flipped it to the 1 hour. You can see a lovely spike off of that nice reversal candle, and we sold off back down into the 0 spot 90 handle. So the round numbers have been playing out very, very well. And yeah, that's pretty much it, to be honest with you. That's how I'd keep my chart set up. Keep an eye on the sort of 50 pip increments. I mean, if we do come back further, and let's say if we break below the 0 spot 90 handle, then all I'd do is just have a look at the 8950s and see how that acts as well. I think we've got a nice, well no, we didn't get a nice sort of, I thought we would have a nice sort of 4 hour reversal off of that, but it closed below. But no, I just keep it as simple as that, to be honest with you. As to Forex, then let's have a look at gold. Gold, I've left it up the same thing as well from last week. Nothing's really changed. We spoke about this fib. We thought if it does retrace, keep an eye out, but it didn't retrace. It just broke up. It broke above, and what it did, it came back down off of that. The 1328s that we spoke about. Lovely daily reversal candle there, or a bullish continuation pattern you can call it, and we just ripped up and broke the 1353s. And we just killed it towards the upside. So I mean, sorry, let's just go back to the weekly actually, because in terms of the fibs that I keep an eye out for on the weekly, this is definitely the one that I'll be looking out for. And it's interesting to see, you can see the 100 and 200 day moving average around that level as well, and the 200 is flattening out as well, so I would not be surprised to see a move up on this weekly towards this 50% and that 1487s. But in terms of the daily and the 4 hour, I've just got a bullish perspective, I think, and it's just all about the buying the dips, to be honest with you. But it hasn't really had any sort of interesting dips to buy. The one that I definitely keep an eye out for, I mean, it's difficult to pick a clear swing low. I mean, this would probably be the one that I'd keep an eye out for. And it's interesting to see as well, because the 61.8 coincides with previous resistance around here at the 1353. So that's how I'd keep the chart up, to honestly, and it's the same on the 1 hour. and also the 50% has had some previous resistance as well around here, so we'd be surprised to see that as nice support. But yeah, that really is pretty much it in terms of gold. I mean, it's definitely due a retracement. I think it will get a retracement. If it does retrace, though, this is the fib I'd be looking out for, because I think it should act quite well. Okay then, that's all for today. Hope you found that video useful. Hope you have a great rest of the week trading. Keep an eye on all that data, because there is a lot coming out this week which will definitely impact the markets. Yeah, have a great rest of the week trading, and I'll catch you next Monday. Thanks for watching.